This week, it's one of my favorite segments, and we're going to kick it up a notch. It's time for our quarterly security money update. The Security Weekly 25 Index is on the rise. In the leadership and communication section, we're going to talk GameStop, short selling, Reddit, and how Wall Street bets hacked the hedge funds. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Deepwatch provides innovative managed security services that empower organizations to be more resilient against today's evolving cyber threats. Deepwatch offers game-changing capabilities in managed detection and response, managed endpoint detection and response, and vulnerability management. All delivered through a unique squad model, a dedicated group of security experts that works directly with each client. From managed security operations to threat hunting to continuous measurement of security readiness, Deepwatch is advancing the service of managed security. Measure your SecOps maturity for free by visiting securityweekly.com/Deepwatch.
Welcome to Business Security Weekly. This is episode number 204, recorded February 1st, 2021. I am your host, Matt Alderman, here in Colorado. Yes, I got my warm cozies on today. It's a little cold. Joining me from G-Unit Studios in Rhode Island, where I believe it's snowing, is my first co-host, Mr. Paul Asadorian.
Yes, it's good to be here, Matt. It is, in fact, snowing outside. I also subscribe. We're going to talk a lot about money and stocks this entire show, which is awesome. I subscribe to John Strand Financial Advisory Advice, and he says in these uncertain times, you should put your money in the bank, take out just enough so that you can like roll around in it in the bedroom and wait. That's my current financial strategy.
And wait. I think wait is the big one there. Also joining me remotely, probably because of the snow. I mean, Jason would love to be in studio.
You know, I told Johnny Blaze that my snowshoes were in the shop today, so I couldn't make it.
Yeah, I mean, you could be sitting there smoking a cigar, warming up in studio, but getting to the studio might not be the easiest.
Yeah, you've got a lot longer commute than we do.
Yeah, I'm over on the coast, and oddly enough, the coast is getting more snow than the inland.
It's weird. It's a weird
today,
storm.
So.
Yeah, I'm exactly like 4.6 miles from studio. So,
lovely.
You could ride your electric dirt bike in.
Well, yeah, that's my plan. Well, no, that one's not registered. That might get me in a little trouble. The new one that's coming in will allow me to legally ride it to the studio. And I've ridden my bike as well.
Not today. All right, couple of quick announcements, and then we get a break into the money segment. Do you want to stay in the loop on all things Security Weekly? Visit securityweekly.com/subscribe to subscribe on your favorite podcast catcher or our YouTube channel. Sign up for the mailing list and join our Discord server. Also, do you have a specific guest or topic that you want us to cover on one of the shows? Submit your suggestions for guests by visiting securityweekly.com/guests. Complete the form. We'll review it, and we will reach out if it's been selected. All right. I can't wait for the second segment, but we got to do the basics first, guys, which is we got to get through the security money segment, which is, our quarterly update. It's a couple weeks late normally than when I would do it. We had some sponsor interviews we wanted to get done first. So this is the first week we're hitting the money segment. And can I just say the market's been on a tear. I mean, just a tear since the last quarter we did this. I mean, the index hit an all-time high on December 22nd, right before the end of the year, and it's still just astronomically high.
And it doesn't seem to be responding negatively to the news about COVID, which is interesting because it seems like the press is really still trying to paint a very negative picture. And in the past, the market reacted negatively to that, but it seems like you said, Matt, it's on a tear. It doesn't give two craps about the news about COVID.
It's
I mean, what's everybody's thought about, the market reacting to maybe the hopes of political stability? I mean, I know politics in at least the U.S. national economy plays a lot into this. So, my thought in just seeing how it's trending is, maybe it's just, the fact that there's going to be some quote unquote stability in politics around here.
Well, belief in stability, right?
Yeah. Belief in stability. I mean, look, there are two things that's really going to drive the market at the end of the day: revenue and earnings, right? They have to continue to grow.
Unless you're GameStop. We'll talk about that in the next segment.
Unless you're GameStop, AMC,
Hold
and a
on,
few
wait a
others.
minute.
We'll get into all those.
There's some
Not now.
butts there. There's some butts there. Except.
But when it comes to the index, like I said, the index hit an all-time high. What was it? 25 and 79 cents on December 22nd. So that's like a 230, like crazy 130% increase or some crazy number. I mean, it's way up there. It closed on Friday at 2226.85, 122.69%. That's, I mean, it was like up 90% last quarter. It's grown up to 122% based on when I started this index a few years back. I mean, NASDAQ's at 13,070.69. That's up 96, almost 97%. I mean, so the market's been up in general during this Q4 time period. And a lot of it, I think, has to do with good earning results. I go through the index and I go update their revenue expectations and actuals and their earnings expectations and actuals. And I plot them, and both exceeded on average. In Q4, earnings beat by only 2%. So that's a little, I mean, it was much higher the quarter before, but earnings still beat by 28%. And that's positive news in the market.
Do you think the SolarWinds hack affected earnings in a positive way, or is that not played out enough? It's
not played out because these are the results that were published in Q4, Paul.
Gotcha. Yeah,
so a lot of these earnings came out in November, December before SolarWinds hack was released, and it's for the previous quarter. We won't fully know that impact probably for another quarter or two.
Gotcha.
Yeah, I mean, just looking at my organization in the beginning of 2020, we made a conscious decision to have more of a defensive financial posture, right? Where we wanted to make sure we had enough cash on hand to get us through the unknown for the rest of the year. But I think by the beginning of quarter four, our organization and other organizations started feeling a little bit better about spending. Maybe even toward the quarter, end of quarter three, I even noticed in my organization, our customers, we started loosening up the purse strings a little bit more, right? A little bit more comfortable to spend.
I agree, Jason. I think most of us feel like we've weathered the brunt of the storm, so to speak, because we have a storm, outside, but the COVID storm, and then, things aren't going to be, I don't think, a rosy picture COVID-wise, but I think they're on the upswing, and spending is resulting from that.
Right.
Definitely. Yeah, without a doubt. So I pull out what are the best rated stocks, worst rated stocks, just so people can see, right? Tenable and Verint both again are top rated by the analysts. They're still a pretty strong buy signal in the market as a whole. And then it's followed by CrowdStrike. CrowdStrike's numbers were, just off the charts. I mean, holy cow. But they're also a strongly rated stock as well from performance.
CrowdStrike's earnings, I think, have done well because I think they've done a good job of diversifying their portfolio and doing really well. We think of them now when we think of Active Directory security, whereas before we were like, well, they're an endpoint company and there's a million endpoint companies. They've diversified well. I think that reflects in their earnings.
It does, for sure. Worst rated SecureWorks again, followed by Checkpoint again, and then NetScout again. Yeah. So, I mean, there are
staples on the worst rated list, right?
Yeah, I mean, there's just something about those three companies the analysts don't like, and they've consistently kind of been on this list. I mean, their stock still does okay, but they're not rated well. They're not looked at as good investments in the market right now. Best performers for the quarter was Sumo Logic, which went public the quarter before, so they had a very positive performance. Just because I don't think they have a lot of track history after going IPO. And SailPoint's been on this list, I think, 3 or 4 quarters in a row since they've gone public, have performed well in the market.
They're doing good things with that money they're getting from the market, putting it in the right places.
Yeah, I think so. And look, we've talked about this, Jason, and you brought this up a couple weeks ago. Identity, right? It's an identity play.
100%.
Identity is still a very important part of this
Incredible.
whole triad.
Yeah, it's interesting how the landscape shifted in the
conversations we're having.
Yeah, it's shifted in the past year, but identity is one of those technologies that certainly I wouldn't say maybe you saw an increase from it, but it's still a mainstay and very important.
It is. Now, in the worst performers, Splunk gets this list again. I think Splunk gets beat up a lot for its costs. There are a lot of other competitors that are, trying to go after Splunk's model, right? And it's had an impact. They've been on this list the last couple quarters of missing.
Yeah, and it's the competitors are trying to basically gain the differentiation from Splunk, saying we're going to simplify your life, right? Because when organizations take a look at Splunk, they say, number one, the cost to actually own is high. And then the cost to have FTEs manage is high, right? So, you almost look at that investment that you make and say, is it better to, and you'll see down the line a little bit more, Arctic Wolf is starting to kill it, right? And do I just go to managed detection and response, right? And do I just move to a service model?
Exactly right. So we interviewed Deepwatch, a week or two ago on why they chose Splunk.
Exactly.
They've got the expertise to run the platform where some of these other organizations don't. And so they might be a really good play, but the only really public MSSP out there right now is SecureWorks, and they're not viewed positively.
Yeah, right.
CyberArk was on this list, which was a little surprising to me. From a performance perspective.
I was surprised too.
Yeah, because I think CyberArk's made some really good acquisitions and moves, right? They're not just a privileged access management vendor anymore.
No, they diversified. They have remote access. Yeah, I mean, they've totally diversified.
Yeah, so I was a little surprised they were on here. Maybe it's just market expectations. But again, we just talked about SailPoint and the identity play. CyberArk is a part of that same market, but they didn't perform as well last quarter for some reason. So they'll be interesting to see what happens next quarter.
Does it become a trend that they're on this list?
Yeah. We did have 2 IPOs in Q4. The McAfee IPO was right around the time we did this segment back in October 19th. We did the segment. McAfee came out like a few days later, public. They opened below their IPO price. This is one of the few IPOs I've seen falter in our space, truly, because it opens at $18.60, below its IPO price of $20. It closed on Friday at $18.85. I think it briefly crossed $20 and then went back under. Just not that IPO did not hit expectations.
No, I look at McAfee and I just look at the profile, and they're in a world of hurt, right? I think they just closed their Israeli office. They're in something like $4.15 billion in debt right now. So I mean, they're I don't know. It just doesn't seem appealing. Everything I've read about their S1 filing has been in a negative connotation. So. Yeah, I don't know. Are they a company, and this is something I'll throw you, Matt, are they a company looking down the barrel of bankruptcy?
Maybe. But why go public? Why put yourself in a public spotlight if that's where you're heading, right? Maybe they thought the IPO would bail them out. Maybe. Jason, but this is, like I said, this is just a miss IPO. And it's like, why did you do it then? Because now you've just made all of your financials public and put you even, in more crosshairs with some of these investors. I don't know. Didn't make sense.
Agreed.
Telos, I think they're French, right? I think the French company, but they listed on the NASDAQ, I believe, here in the States, went public on November 19th, opened at $21.90, which was above its $17 IPO price. It closed on Friday at $35.30. It's doubled since the IPO.
Positive.
That's what an IPO looks
like. Polar opposite of McAfee.
Yeah, exactly. Like that's success, right? That's why companies go into the public market, right? They want to grow, get capital so they can continue to invest. They don't want to flounder.
I bet you they're not $4.16 billion in debt.
Yeah, that's probably true. I also try to figure out, okay, who's coming in what IPOs are coming in 21. These are the 4 companies I found that looks like there is a possibility. Dark Trace was talking about a Q1. Exabeam is out there. Look out in Illumio. Illumio was kind of projected later in the year, but these are the 4 I found that are kind of potentially that next set of IPOs coming out.
I'll tell you, Exabeam's making some moves, man. I mean, they just announced a partnership with Snowflake, from a data lake and data management perspective. I think they're going to be doing a lot more, with analytics and automation and things of that nature. So they're making some moves. That partnership with Snowflake is huge.
Yeah, and when Snowflake came out, I thought it was interesting. They have this security slant to them, but I don't consider them a pure play security company because they're more on the data side. But they do have a little bit security capability. If they can build strong relationships with security companies like an Exabeam, it becomes a very interesting partnership with all the data capabilities they have with some security expertise.
No, agreed.
Yeah. Let's see. No mergers and acquisitions in the quarter. Now 4 scouts out of the picture. The one interesting thing I thought outside of the McAfee IPO issue was FireEye closing that $400 million Blackstone investment.
Yeah,
and
now that was in the works before everything came to light, right? I think that was in the works. I think Q4 of last year, wasn't it?
It was. It was in the works before the breach, right? The whole SolarWinds thing. So it's just interesting that they went and raised private funds from Blackstone versus trying to raise them in the public market as a public company. It obviously gave them some capital to make some investment. Maybe helps them in a better position, to get through this whole SolarWinds issue too.
Right. Yeah, and I would have thought, the whole breach would have thrown a wrench in it, but it just went right through. It charged right through. So, I saw something from one of their, managing directors or something, and they were answering questions about continuing on with the investment, and that senior manager, that senior director basically said, listen, we have confidence in FireEye's long-term strategic vision. That's why we held true and just kept it going.
Yeah, it's good. Some very interesting funding. And what's interesting is with COVID, some of my normal sources aren't delivering at the same frequency their reports that they had in the past. So I have this wonderful source called Enterprise Security Weekly that I pulled all this data from. So Paul, because we've been covering all this stuff on Enterprise Security Weekly, I just went back through Q4 and pulled all the articles, and I'm like, here's the funding for the quarter.
Yeah, Sentinel-1, man. When I saw this on the list, I took a look back at all of their funding since they started in 2013, I think it was. They've raised over almost $700 million since 2013. I look at them and I start looking at their profile, and I'm saying they may be on the M&A here pretty soon, our list for M&A.
Yeah. I mean, where do you go from here outside of going public?
Right. Yeah.
Right. You talked about Arctic Wolf. They raised $200 million last quarter.
Yeah, and I mean that's basically their stance is, listen, you can go out there and spend the money on the product, the architecture, the people, and still not be ahead of the game, or you can come to us and we'll manage your entire SOC for you, right? I mean, managed detection and response, soup to nuts. They're playing that whole, buy versus build.
Yeah. Tanium's on the list for $150 million back to the endpoint market. The endpoint guys are still raising capital.
Mm-hmm. Yeah, they've got to be looking at going public soon too.
Yeah.
The
other one that really stood out to me, guys, is Cato Networks. We've talked about the whole marketing on SASE and things of that nature, but when you look at Cato Networks, they are the OG gangster, pure play SASE architecture out of the gate. You have the Ciscos of the world and the Fortinets of the world, trying to build that kind of architecture from a legacy type product base. These guys were pure play out of the gate, identity driven, global reach from, as far as geographically dispersed points of presence, and 100% cloud-based delivery.
Yeah.
Yeah, it's interesting, Jason. I like your point and analysis because the larger players, I think, have not really, they failed to really enter that market of SASE because they've got the components, but they don't have the means to put them together quickly. And like you say, you get a Cato Networks.
Again, it was all siloed product lines, right?
Yeah, Perimeter
Siloed
81 was the
service
same way. Like, hey, we're just going to come in and do this. Whereas the big behemoths take them time to put that stuff together.
And Cato started with that service edge architecture. That's how they started, right? And that's why they're the OG when it comes to SASE.
Yeah, because the big boys just they can't deliver the components in a way that makes it easy and simple to manage.
We've seen that
probably
before,
shipping
too.
appliances and stuff.
That's
all over
a trend.
the place,
That's a trend. We've seen that before in this market, certainly.
Yeah, Menlo Security, the browser isolation guys, is in this round. Beyond Identity, brand new identity plays in this round. There's some interesting raises in here, and you kind of get a feel for what's hot and what's not in the market right now when you look at these private raises and the amount of money that some of these companies are raising. A couple big acquisitions. Palo Alto acquired Expanse. That was $800 million. I mean, Palo Alto's just been on a buying spree. I mean, this is going to fit into probably more on the it's not the Prisma Cloud side, it's the other side. What's that? The XOR product line. It's going to go over there.
I noticed a trend in the Palo acquisition and kind of the Fortinet acquisition, and I'm looking at your traditional infrastructure buy a box type companies, right? The manufacturers, the networking manufacturers, and the Palo is basically acquiring an attack surface management organization, right? And Fortinet is out there looking at monitoring and diagnostic platforms too, right? So it's I see these manufacturers going out there and trying to pull in organizations that can do a good level of diagnostics and monitoring and attack surface, almost vulnerability type scanning of their environments, bringing in those type companies.
Do you mean Cortex from Palo Alto?
Yeah, Cortex. Yeah, the Cortex side of the house. Because the Prisma Cloud side is on ASW now, but it's Cortex and XOR and the old Demisto product, all that stuff rolled together. Yep. And then FireEye acquired Response Software, which I thought was interesting as well, for some automation around incident response. I mean, the Mandiant guys well, and they're out there, as one of the major players in the incident response market and some of the forensics work. And then they buy somebody like a Response Software, looks maybe to get some better leverage and automation around that.
Yeah, I was, I was a little surprised at the Akamai acquisition, right? Buying a mobile and IoT security organization. That surprised me a little bit.
Yeah. Don't know where they're going.
Rapid7 made an acquisition too. Did you see that?
Oh, DivvyCloud or another one? Yeah, that was
a new one. Yeah, right.
That was today.
That was today. I saw that this morning.
Today. Yeah. I'll cover that one next quarter. This was all the Q4 acquisitions, but Rapid7 just acquired.
I don't have it in front of me.
Oh, Alcide.
Yes.
Alcide.
Yes. Yep. Yeah, an Israeli-based startup.
Yeah, and that's going to tie into some of the cloud workload protection and container stuff. That's where that acquisition.
I saw that listed as their competition, but I didn't know if Owler was being inaccurate or not.
Nope, that's who it is. Gotcha. Yeah, because we competed with Alcide at Layered Insight. So it looks like an expansion of some of the cloud platform. They bought DivvyCloud in Q3 last year. This looks like they're doing some additional acquisitions on the cloud containerization space, because that space is getting hot. We see so much on the AppSec cloud side going on right now with a ton of people moving there. That market's going to continue to stay hot. And then, Paul, I think we only met with one or two new startups. Sevco was one that you did a briefing with that we thought was interesting. So we're doing a little more research into them.
Yeah, I like Sevco. Conquering the asset management, but not. I find that newer companies in this space don't want to be labeled as asset management, and I think they're correct in that assumption. I think we've talked about how asset management kind of refers to like that old, like I put an asset tag on physical things, and how like much that doesn't apply today, and so it's not really asset management, right?
Yeah,
and that's a good one. And Alluria is another one in the deception space that we're working with as well.
Yeah, we covered Illyria a little bit last quarter, but I don't think you were on the show, Paul. I think it was just Jason and me, so we didn't get a chance to get your thoughts there. But yeah, they're on the kind of the decoy deception side of the house, right?
Yep.
Yeah. Definitely interesting newer companies in the startup world. So that wraps up the Security Weekly 25 Index. We're going to take a quick break, and then we're going to discuss the GameStop phenomenon.